All right, let's jump right in. Today, we are cracking open a major analyst report on a company that, let's face it, at the absolute center of the AI universe, NVIDIA. One firm just slapped its highest possible rating on the stock. So let's get into it and see exactly what they're thinking.
And there it is, right off the bat, the big headline. This isn't just a buy, it's a strong buy. That's an analyst basically planting their flag in the ground, saying, hey, we think this stock is going to crush it. It is the highest level of conviction they can possibly have.
Okay, so to really understand just how big of a call this is, we need a baseline, a starting point. When this report dropped, the stock was sitting at about 181 bucks. Keep that number in your head, because what comes next is pretty wild.
And boom, there it is. The analyst's price target for the next 12 months is $270. I mean, that is a huge potential upside from where it was trading. So the big question is, what in the world makes them so confident?
So let's dig in a little deeper and figure out what this strong buy rating really means, especially when you compare it to what everyone else on Wall Street is saying. You know, context here is everything. On the left, you see the average opinion from almost 70 analysts is a buy. And that's good. But on the right, you see this one firm going a step further with a strong buy. They're signaling way more conviction than the rest of the street. They're not just positive, they're all in.
Okay, so where is all this optimism coming from? Well, it pretty much boils down to one just absolutely dominant part of NVIDIA's business. And trust me, the numbers on this next chart, they tell the entire story.
Wow. I mean, just look at that. This chart says it all, doesn't it? A mind-blowing 88% of NVIDIA's revenue is from its data center business. Now, gaming is still important for sure, but it is crystal clear that the company's future is completely welded to the AI revolution happening in data centers across the globe.
And here's the analyst Angelo Zeno, in his own words. He's really pointing to two crucial things here. First, demand from the big cloud companies is staying strong. And second, and this is key, the customer base is getting bigger. It's not just the usual tech giants anymore. All sorts of other industries are starting to buy in.
So all that confidence, it translates directly into some frankly eye-popping financial forecasts. So let's take a look at the hard numbers they're using to back up this massive call.
Just look at the climb on this chart. The analyst is calling for revenue to more than triple between 2024 and 2026, and then just keep on climbing. We are talking about a jump from around $60 billion to almost $300 billion in just a handful of years. That's staggering. And of course, when revenues are soaring like that, you expect profits to follow. This table shows the projected earnings per share, or EPS. You can think of that as each shareholder's slice of the profit pie. And as you can see, the analyst expects that number to more than double in just 2 years, from fiscal 26 to 28.
But if there's one number that really captures the raw financial power we're talking about, this is it. The report is forecasting over $150 billion in free cash flow in fiscal 2028 alone. That's the cash left over after paying for everything to run the business. It's just an unbelievable war chest for them to innovate, make acquisitions, or just give back to shareholders.
But here's the thing. The analyst argues this isn't just a story about selling more and more chips. The real key to their long-term belief in the company is what's called a competitive moat. It's about building an advantage that's way harder for anyone else to copy than just making a faster chip for a little while.
So, what the heck is a software moat? Well, think of it like this. It's when a company's software becomes so ingrained in how its customers work that switching to a competitor would be a complete nightmare. For NVIDIA, that's their CUDA platform. It's become the go-to standard for AI developers, and that creates this incredibly powerful, sticky advantage.
So the analyst sees this moat being built on three main pillars. First, there's the CUDA software that all the developers are trained on. It locks them in. Second, there's a growing business in enterprise software that big companies like Salesforce and SAP are using. And third, they're forming these deep strategic partnerships with huge players like OpenAI and even Intel, which just weaves their tech deeper into the fabric of the entire industry.
Now look, no analysis is complete without looking at the other side of the coin, right? This report is incredibly bullish, but the analyst is also really clear-eyed about the potential risks and the storm clouds that could be on the horizon.
And here are the big ones they've flagged. Geopolitics, especially with China, is a huge one. The chip industry has always been a boom and bust kind of business. There's a real concern that customers might overbuy and then slam the brakes on spending. And of course, you've always got the threat of new competitors, and the big one. What if all these companies spending billions on AI can't actually make money from it?
But despite all those risks, the analysts' ultimate conclusion is that we are not in some normal cycle. They believe this AI revolution is kicking off a decade-long super cycle for the entire chip industry, and that NVIDIA is right at the heart of it.
So, that really leaves us with the big question, doesn't it? The report lays out this powerful, compelling case for a decade of pure dominance, all built on a deep software moat. But in a world like AI that changes so fast, where breakthroughs happen what feels like every week, can any moat really be wide enough to last? That is the billion-dollar question.